Hello everyone, welcome to Daily Outlook on EU. So earlier this week, I give you some potential scenarios in the weekly outlook that price could play out. And along with that, I also mentioned that I'd be dropping a daily outlook on Thursday to determine the next dawn liquidity for price once the CPI price action plays out on Wednesday. So here's the outlook and let's break down this price action right here. So first of all, looking at the daily time frame, you can see that on Tuesday, we took out this daily swing high, which, if you remember, was exactly the drawn liquidity that I mentioned in the weekly outlook. And now that we've reached it, the big question is that where does price go next? And to answer that, let's analyze this price action that we've got. Now, if you look at the Wednesday candle, you'll notice something. It didn't really do much, right? And it just kind of ranged and formed an inside bar candle within the Tuesday's candle, right? Now, first thing first, if we apply market profiles on this transaction, we can clearly see that we've had an expansion profile, and now that we've taken out this high with this expansion profile, the the most logical expectation for price is now to have a retracement profile from here. Now, why do I say that? Because based on market profiles, price doesn't just keep expanding forever, right? It needs to pull back first or have a retracement profile after an expansion profile. And then after it has either a retracement profile or a ranging profile, then we can assess whether it wants to continue higher or completely reverse, right? And also along with that, we've taken out this swing high, so that's a supporting factor for this retracement profile too. We've had an expansion profile, and now the most logical expectation for price is to have a retracement profile before it continues moving higher, right? So if we are expecting a retracement, the question is that where is price likely to be attracted to? Meaning, where is our short-term down liquidity, right? And the first level that I'm looking at is this Tuesday's candle low, this low right here. And the reason I'm first of all looking at this low is because this is the exact candle that took out this daily high. So at the very least, we'd expect price to seek the liquidity below this candle's low, right? And once we take out this candle's low, the next potential target would be this daily fair value gap or this daily FVG, right? Right now, this is where I'm expecting price to head towards. First of all, this Tuesday's candle low, and then eventually this fair value gap. And once we either reach it or fail to do so, I'll reassess next week's price action and I'll figure out what's next, right? Also, if we take a step back and look at the weekly profile, we can see that Tuesday formed the high of the week here, right? And Wednesday didn't do much and just ranged within the Tuesday's candle. It basically retraced a bit. So now we can expect Thursday and Friday's price action to likely expand lower to take out the drawn liquidity, which is first of all this Tuesday's candle low and then eventually this fair value gap. And to top it all off, we've also got a major SMT divergence with GU. What you can see right here is that EU took out this high, right? You can see that with this Tuesday's candle, EU took out this high, but GU failed to do so, right? And that tells us that there is a discrepancy in price action, and that's something that we can use to our advantage, right? We've had an SMT divergence with GU, and this divergence indicates that there's a discrepancy in price or a non-symmetry in price. And if you know such non-symmetries only present itself at high probability areas for reversals or retracements, right? And our top-down analysis tells us that we can potentially retrace from here, and that idea is now backed up by this divergence too. Those are the key supporting factors behind this retracement idea that I've got in my mind, right? That's the bigger picture on the daily time frame. Now, let's go down to the 4-hour time frame and let's refine all of this analysis down further and let's see if it supports it or not. So, on the 4-hour time frame, the market context is pretty much confirming the same thing. We took out this high and now I'm expecting price to reverse from here and take out all of this built up liquidity from this week and the past week. And also if we zoom in a bit and we isolate this micro daily range, then you'll see something. You'll see that this is the equilibrium level, right? And right here we've got the discount region and price is currently sitting in the premium region of this micro dealing range. So naturally price would be more inclined to move towards the discount region, right? The natural inclination for price within this premium region of this dealing range would be to move towards a discount region and reach a key level within this discount region, right? That would be the natural inclination for price. And the first key level that we've got within this discount region of this whole micro dealing range is first of all this low right here and then this 4-hour fair value gap, right? This low is inside the discount region of this dealing range along with this 4-hour fair value gap, right? So my expectation for price is to first of all take out this Tuesday's candle low, then eventually this Monday's low, and then to retrace towards this discount low and this 4-hour discount fair value gap within this micro dealing range, right? That's what my expectation for price are, right? And here's another thing. To back up this trade idea that we've also got another 4-hour SMT divergence as well. We remove this right here. You can see that EU failed to take out this high, this Tuesday's candle high. EU failed to take out this high on Wednesday, but GU did took it out on Wednesday, right? And that means that we have another SMT divergence on the 4-hour time frame as well, right? This time EU failed to take out a high, but GU did. And if you understand the intricacies in the details of SMT divergences, you'll know that they often happen at major reversal points, right? So now with our top-down analysis, we've got another solid confluence telling us that price is more likely to retrace from here or to reverse from here on the 4-hour time frame, right? That is what my expectation for price are for the rest of the week. Now, let's talk about the trade opportunities or the entry opportunities that we can have for the rest of the week for Thursday and Friday. First of all, we've also got a red folder news dropping today on Thursday. And the way I expect the Thursday price action to play out is that I'm expecting London Open and London Lunch to likely range and consolidate. And then I expect a manipulation above this Asian range high during the news release, followed by a drop in a reversal lower on the lower time frame, right? I'm expecting London Lunch and London Open to consolidate, then a manipulation move higher or a manipulation profile on the lower time frame during the news release above all of this liquidity that it would have built, and then I'm expecting a reversal from there on the lower time frame. And here's where I'll look for an order block confirmation setup, right? And if I spot any setup today, I'll make sure to provide you with a signal inside the group. This is the primary expectation that I have for price. Another entry expectation would be that price just continues down lower without any manipulation higher above this Asian range high or this candle's high. And in that case, I'll then look for a continuation candle range lower, right? But I'd only do that once the red folder news ends, and then I'll decide whether I'm looking for the initial expectation of price manipulating above this candle high and then dropping lower, or maybe we're just having a delayed protraction profile on the lower time frame, and we're going to continue without any manipulation higher, right? I decide that after the news event or the news release. So for today, my directional bias is bearish, so I'm only looking for short trades. And my plan is that if price gives me a setup, I'll execute the short trade and I'll execute the entry model. But if price just expands higher without a valid entry for me, then I'll stay out, right? In that case, I'll stay risk off without chasing the market, right? Simple as that. Now let's talk about something important that many people fail to understand properly, and that is how should you approach the market, or how do you approach the market. Now, first thing first, before executing a trade idea or an entry setup, you need to actually see price confirm your buys, because having a directional bias is great, but the market doesn't care about what you think or what I think. It's about what the market is actually doing in real time, and then you and I adjusting to that price action and adjusting our thought process and our decision making process accordingly to that, right? You wait for price to show you its hand, and then based on that you make your decisions, right? I don't just enter a trade because it looks good or because I think it should go down. I wait for a clear setup, right? And I wait for clear supporting factors in the form of a manipulation profile, a shift in market structure, or an order block confirmation, right? These are the supporting factors that either validate my setup or invalidates it, right? And once my setup is validated, I then refine my entry, and only then I take my entry, right? I'm looking for a high probability entry point, right? Ideally at a level where I can minimize my risk and maximize my reward. And that means I avoid chasing price. Instead, I let price come to me. If price moves in my favor, I then manage my trade actively. That's how I approach the market. Now, you may be wondering, what if price doesn't do what you expect it to do or what I expect it to do? In that case, for example, if price doesn't trigger my entry criteria, I do nothing. Simple. If price moves towards a low probability area instead of my expected direction, then in that case, I stay risk off. If I take a loss, then instead of panicking over it or revenge trading, I immediately shift back into a neutral mode and reassess my analysis, right? Without forcing any trade out of frustration or out of making back what I lost, right? This is the part where most traders mess up. They think that they have to be in the market all time, or that if they miss a move, they lose money or they've lost that money. But that's not how it works. My approach is simple. If the market gives me my setup, I take it. If the market doesn't give me my setup, I stay out, right? There's no forcing, no gambling, no emotional trading, right? If I only take one high probability trade per week, I'm perfectly fine with that. It's not about how many trades you take, it's about the quality of those trades that you actually execute throughout the week, right? The reason most traders blow their account is because they overtrade. They think that more trades is equal to more profits. They force setups because of that mindset. They take revenge trades after a loss, right? And then on those trades, they risk way too much to try to make it all back, right? And that way they blow their account. At the end of the day, trading isn't about being right all the time. It's about managing risk and executing with precision. The goal is to follow your plan, and if a setup appears, you take it, but if it doesn't, you stay out. That's how you trade professionally. Because look at me, I've only taken one trade this entire week. just one. And guess what? I don't feel pressured. I don't feel like I need to force another trade, right? I'm completely chilled, relaxed, and content because I know I followed my plan correctly, and that plan have only provided me with one single trade, right? If it had provided me with another trade and I had missed it, then maybe I would have felt a bit guilty about that, because that would have meant that I failed to follow my plan. But that's not the case. The case for this week is that my plan only provided me with one trade and I executed that trade idea, and that's it. That's why I'm relaxed and I don't feel pressured to take more trades just to make more money, right? Most traders think that taking more trades equals to making more money. But let me tell you, that's one of the biggest myths in trading. More trades do not mean more profits. In fact, more often than not, more trades mean more mistakes, more stress, and more losses, right? And what actually correlates to consistent profitability or more money is the way how you stick to your plan with discipline, right? If you stick to your plan with discipline consistently, no matter what, then that equates to more profit, right? And not the fact that you take more trades.